Next up is Dirk, I think, from the European PropTech Association. I don't know if Dirk is already ready for it because we have 3 more minutes left.
Hi, Walter.
Hey, hello, how are you? Oops.
I'm fine, you?
Now I need to put you in the hot seat. Yes, there you are. Now I can see you. Yeah, very good, very good. Nice to see you again.
Yeah, likewise. And
last time was in London. How is life now?
It was a good stay for you in Dubai. I saw it was a
Dubai.
big success.
Yeah, Dubai was a big success. Yeah, that was really amazing last week. So hopefully we can do this more and more often.
It was a unique challenge. I'm really proud that you did that one.
It was really unique indeed. It was like one of the biggest real estate developers in the world. Outside of China, it is, I think, the biggest real estate developer we have. So yeah, it was really a unique opportunity. Yeah, and of course they were a little bit maybe behind in adapting technology, but they have such an amazing leadership. Yeah. So if they say they are going to do it, then they maybe they are like a couple of years ahead, but they can make up in a very short time because everybody is then on the right pace and it's just implementing, and that's amazing to see.
Yeah, it's great, really great.
And we in Europe are then talking. We say that we're going to do something, and then for 5 years we do the talking, and then maybe we do some stuff, but they just do it. That's unbelievable.
We're trying to help, huh?
Yes. That's why we need you, of course. Yeah.
Okay. Listen, I prepared some things for today to share with with all of you. First of all, a bit about the market and the investment numbers, and then the latest ones. And I'm going to talk specifically today about EU Green Deal and then climate tech, of which PropTech is without any doubt also a part. And then also the investment numbers in that climate tech. I will explain then why climate tech is so important on the level of the European Commission. It's really the next hot thing, I might say, for the next years. And in the end, I will explain the focus of the European Investment Fund and the Commission on impact investing, which is, again, a step way higher than just ESG.
Nice. Yeah, and I think we are waking up or not, because you see a lot of things happening all over the world, and we're waking up to move things forward.
It's great. It's good.
Do you have some slides that you would like to share?
Yeah, I have.
Then I will put myself on mute and give you the floor.
Just tell me if you can see this one, Walter.
Yes, I will. Yes, I see it right now.
Okay.
If you put it in presentation mode, it even looks better. Yeah, that's amazing.
Yeah. All right. Good. Well, welcome everyone. I'm going to start with an overview of the latest figures in the PropTech ecosystem. You know that about 3,000 PropTech startups in Europe. Many of them have applied to the current edition of the PropTech Startup Europe Awards. We have about 11 billion invested since 2010, with a certain number of unicorns worldwide, and a lot of PropTech deals per year on average when you look at the period 2013 to 2020. So a lot of deals happening there. And by the way, still a lot of deals happening in this market that is on its way again to a higher and higher maturity. And speaking of maturity, we must say that 50% are still in a validation stage. You got a bit more these days in growth, more than in 2019, but the figures for 2021 are similar to the one of 2020. So the whole network that we have, this PropTech ecosystem, on the left side, of course, all these corporates that are activated, and then on the right side you see all these national and global PropTech associations. And I put there also, Walter, a lot of the mobility associations, because in the vision of the future, specifically from the Commission out, mobility and real estate become more and more intertwined, and will be making up a very large part of what is called urban tech. And urban tech is really like mobility tech, it's property tech, and it's energy. So these are the three pillars that, that the Commission looks at when they look at urban tech. Global funding, well, I can tell you that about 12 billion have been invested over the last 10 years, so including the numbers of 2021, and that's for Europe, of course. We have 65 billion invested in the US, and then 23 in APAC. I just want to point out here, Walter, that for once Europe has a bit more startups than the other continents, and that we have of course the Green Deal. So I was talking about the awards. Well, these were the ones of the best 50 of last year, and here is what they are doing in these buildings. It's a quite, for me, important image because it gives a fair good insight on how all these different actors with new technologies are acting and improving the quality of and so the value of a building. So when we look at the most frequent occurring drivers of innovation and in domains there, we still see, Wouter, and that was also the case in 2020 and 2019, is that market and transact and manage and operate stay really big chunks, or let's say where the market is very crowded. I might also point out here that finance and invest is making an early start to have more and more startups. Now, where have the investments been concentrated? That's without any doubt in manage and operate. So if I go back, you see that manage and operate and market and transact, it's about the same volume. When you look at the volume and the investment, well, there is manage and operate. So it's really about those solutions that bring an immediate return on investment that the investors apparently at this moment invest the most in. Now, the investment teams, I can give you a handout to ones that are interested in it. It's important to see when you look at technologies, the investment teams that invested in. When you look at intelligent infrastructure, or you look at the online markets, the marketplaces, still a lot of investments going into there. And what I was saying about Wouter, about the urban tech, that it includes energy, well, you can see there in the middle quite some investment has already gone in energy efficiency. This one might not surprise you. Which type of investors are most prevalent in the market? It's the VC, and that's very clear. When you look at Europe, I've been talking a lot in the last years about the importance of the Green Deal. Let me just repeat that European climate law, which was voted last year, is now being written into laws. That will be then transferred into national laws, and it's going to have huge impact. And I feel it also within the real estate community on the European level, that there's a lot of anxiety about what is coming up. So my answer to that is very simple, that the laws will be very, very tough. It will be very strict, and that is a positive message I always give for PropTech, because not only it's like, at the crossroads of digital and green, which are the two top priorities for the Commission, but also in terms of budget, and a lot of budget will be available. When you look at the new Horizon Europe budget is 95 billion. Wouter, I want all the PropTechs in Europe to apply to those programs, and some of them have succeeded, and very successfully, by the way. I've seen some project approved by the Commission of 7.5 million. So it needs a bit of work, but I think it's extremely important. And when we then look at the total recovery plan of the EU, which includes, of course, also our fight against climate, you see that the recovery plan of the European Union is even bigger than the one of the United States. And what is just important for us to remember is that when I say the EU 2.4 trillion, you must know, Wouter, that 25% goes into climate investments. which is also for me very, very important. Now, the brand new slide that I have here for you is really a new one, because it has been decided within the European Commission that they are going to slightly change the way that I work, and they are working now in the new period until 2027 with industrial ecosystems. So these are networks of organizations. That means, of course, people that are active in the promotion of PropTech, for example, like you, Wouter, but also the PropTech themselves. They are part of these industrial ecosystems that are called for the recovery, but is of course also for the fight against climate change. And you see that construction is there, digital is there, renewable energy is there, mobility is there. So for me, it's very, this gives a very good example of what is going to happen in the next 6 years. That is focus on combining these industrial ecosystems. A lot of money is flowing into there. More specifically, within that program, there's the 4 real estate pillars for the Commission, which is livability, sustainability, resilience, and affordability. Affordability being really very important. That's why they created House. So it's affordable housing. I think it's going to be also very important topic within the thematic of the smart cities. So our current EU taxonomy, that is since January of this year applicable. And this taxonomy was the new taxonomy where we part from 6 environmental objectives, and we act according to the principle that we do no harm. So when you want to be taxed favorably, you need to do a certain activity, or you need to have an economic activity that must meet the 3 conditions of substantially contribute, do no significant harm, and comply with minimum safeguards. Now, is that enough? No, that's not enough. And that's why the EU taxonomy will most certainly evolve in the next years and make it even more difficult to get to the principles or the goals of the EU Green Deal. I've been talking to you how PropTech plays that important role within the larger circle of urban tech and in the end climate tech. This, Wouter, is where we are going in the future when you look at from the European level. So we got technology for PropTech, for property, and then the mobility technology and energy being part of urban tech, and with a very, very big chunk of that being also related to climate tech. And this climate tech is something that is for the next 6 years also with the Commission high on the agenda. And what is good is that climate tech investment in Europe is really growing fast, and that's very good. Investment growing 7 times since 2016. A lot of early stage investment into European climate tech startups. That's also something where I say, wow, this is good. Maybe it's also good to say, Wouter, that climate tech, it's of course concentrated around decarbonization. And in PropTech, not all companies, of course, are busy with inventing new technologies to decarb our world. But I can tell you that it's going to be really high on the agenda, and it's a high focus point on a European level to have more PropTechs dedicated to decarbonization. So if you look at that climate tech ecosystem, of which quite some PropTechs are part, and it's more worth now more than 100 billion. So it's doubled in value in 2 years' time. It also shows the importance that investors have detected in this thematic. So in 2021 alone, the European climate tech startups, they have raised a record of 11 billion, and that's double of 2020. And since 2017, climate tech is the fastest growing investment vertical in Europe, second only to fintech. So quite impressive, and I'm quite sure that a lot of the PropTechs will be able to surf also on that wave and or maybe even to adapt their current offerings and look more into technologies that can be defined as climate tech. So also again here, as what the case was with pure PropTech, you see that venture capital represents the most capital for climate tech companies. It was 41%, where PropTech is about 50%. So another thematic that comes out of climate tech is when we started in real estate with ESG, there was a lot of companies that were born in the European startup ecosystem and that have strong links with ESGs. But this being said, ESG is far from where we need to go, because ESG, just to make a difference, Wouter, and ESG helps us to identify which competitors are performing better, you know, in terms of conserving energy, for example, reducing costs. So it's a strategy in ESG allows you to limit the negative impacts of the activity of a company on society. But that's not enough. Where we need to go to is to start with impact investing. And impact investing, it supersedes ESG. It's, I might say, well, bluntly, it's another, and it's another higher level. So this impact investing is about funding the implementation of new technologies that support an effective fight against climate change. So the investors can there invest in companies or funds with the tendency to generate a positive, measurable benefits for the society. It can be environmental, social, but also an attractive financial return. So that's also the definition of impact investing. Now, it is, of course, rather sad to see that only 3.7% of the funds globally are certified as impact funds. Why? For the simple reason that when you start impact investing, you need to apply a whole framework, and it's a very complicated one. There's only 2 standards in the world that you can follow in order to be certified as an impact fund. The main reasoning is that when you want to do impact investing, you need to, you can only invest in companies for which you can measure the positive impact on the planet. So we start with ESG compliance, and then we are applying certain methodology, and then using this methodology to select in which companies we are going to invest. And I must say here, Wouter, and that's very important for the people here in listening to us, in the next 6 years, the institutions such as the European Investment Fund and the European Investment Bank, they will invest in impact funds. So if you're not an impact fund, you're going to need to become one, right? And it's important, and it's a big market because the capital raise for impact funds between 2006 and 2021, you see that Europe has a very large part of that. So we are really looking at impact investing, and I think that it's also 2 reasons. First of all, there's a Green Deal, so there is more pressure on the market, but also because the investors in Europe are more and more waking up to everything that is impact. I see it with corporates, but I see it even in the family offices, where family offices that want to allocate part of their capital explicitly to impact. So when you look at the different thematics on where impact funds have been opened, 2017 to 2021, you see that some of the thematics there, Europe is really leading. Look at pollution, it's mainly Europe that they're investing there. But if you look at the right side, Wouter, real estate, for example, you see that in the USA, there's more impact funds created than in Europe. So again, in Europe, for real estate, we are lagging behind when it comes to impact investing. So let's deep dive into what that impact investing means for society, and also why the European Investment Fund and the European Commission find this so important. Well, first of all, it means that first you apply the ESG filters, then you're going to look to investment pillars, and you're going to establish impact KPIs. So if I want to invest and I want to call it an impact investment, then I must first look at how this company will have a positive impact on society. And I must make it measurable. If I cannot make it measurable, then I cannot invest in that company, because it would not be an impact investment, right? So during the life cycle of the investment, you need to stick to the impact plan. There's an impact plan that you need to make together with the company that you invest in. So what is now so different with all the other funds, and why are only 3.7% of funds globally certified as impact funds? Well, it's in the bottom of this slide that you see. Well, it's because the managers of those investments, the managers, their remuneration, or we call it carried interest, is linked to the impact. So what does it mean? Well, if I invest in a company, for example, that would be a marketplace. Well, if you then start measuring what is the impact on the environment, it's going to be relatively low. If I invest in a company or technology that puts a device in an office, for example, that captures the CO2, well, I can measure how much tons of CO2 it would take out in 1 year. And if that company is then deploying their technology in, let's say, 500,000 buildings in the world, then you can measure the positive impact of that company. So if the company is not performing, impact-wise as foreseen, then the managers are paid less. And this is exactly the reason why you have only 3.7% of funds globally being impact funds. So once that you do this, Wouter, and I think that it would be good for PropTech companies that want to receive impact investments, because there's a lot of, again, positive taxonomy rules about it. Well, you need to select a certain number of pillars. When you look in the case of an urban tech environment, we're going to look at, of course, sustainability and the corresponding SDGs of the United Nations, the livable cities, climate proofing, and of course access and affordability, because that is something that is coming back a lot in the current plans of the Commission. So then we need to start calculating the impact of a company that you would like to invest in. In terms of sustainability, you're going to check the tons of avoided greenhouse gas emissions. Yeah, it can also be the avoided raw material, but it can also be an impact water that is not on the environment but all social. So that's why when you look at the livable cities or access and affordability, and let's take that one, where you can measure people with enabled access to affordable house. These are things, it's a bit more difficult to measure, but you can measure it, and you must do it through, of course, external certified parties that you are not affiliated with. So impact measurement is very important. And to be very blunt, if you do this, then we're done with the greenwashing. You cannot do greenwashing anymore if you are investing according to these principles, because if you measure it and then you apply the remuneration link, then you know that no one will do, or let's say that no one will be inclined to go into greenwashing. Greenwashing is, by the way, a very hot topic also at the institutions, because there's a lot of greenwashing happening, specifically also in real estate. So when we are looking at the investments, we look, Wouter, at the scale. Yeah? Is there a tangible environmental impact? Does the business model align with impact? And then we look at the second pillar here is the risk. Do we pass all the ESG exclusions in the global impact? What are all potential ESG and impact risks, negative externalities? And then we look at the third pillar is the readiness. So have other people impact investors already invested? Is the company pursuing impact labels like, for example, B Corp, which is relatively well known by now? So these are the things that we are assessing and that we are measuring. And then with the company, because right now we are with some partners investing in some of those companies, Wouter, then we launch and we establish an impact plan with the company. So it means corporate documentations, communications, it means achievable and measurable impact objectives, and of course KPIs, and then also in the end reporting on it. So in the end, we're gonna measure, and this one is a bit too much for the moment now, but in the end you're gonna report on that impact, and that is something where we need to go to, because if you are an impact fund, then you can publish your impact figures, and then we can, on a European level, again, we're looking at which investments have really had a positive impact on the planet. And if we can do that, then we can again align the new policies, for example, or the new financial programs, again, align them with these impact effects. So for me, that the last part was about that aligning of the incentives, the impact linked carried interest. It's something that is causing a lot of discussion. Last but not least, and that's a good one here, if the investor, let's say the manager of a impacting investment is not achieving the impact goals, so not achieving the target, then of course a big part of the remuneration will not be going to that manager. The question is then, Wouter, where will it go? Well, it will go to a predefined other charity goal, or it can be to certain projects. For example, it could be a project of the Commission, but it could also be a project of a private nature. So that's a bit the story about impact and where we are going to with that impact. And last but not least, I think you also participate in the Relevation Summit. If people are interested, is something that is also supported by us and supported by Wouter, 29th and 30th of June. I thank you very much, and maybe Wouter, in the meantime, you have some questions.
Yes, very interesting, Dirk. Very interesting. So greenwashing will be put aside.
Well, listen, it's a very hot topic, greenwashing. Certainly on European level, it's really hot. And
it's difficult also. It's difficult to see.
Yeah, you might. It is like on European level, we know that about 80 to 85% of what is being published is greenwashing.
Yeah, that's a lot.
That's enormous. So yeah, that's enormous. We cannot continue like that. We cannot continue like that, and that's also the vision of at the European level, that we need to look at that type of impact investing, right?
Yeah. So how does it work when impact investing? So you get, as a startup, you raise, for instance, $1 million or 1 million euros. Let's put it in euros, of course. Do you get that at the first moment, or is it getting into tranches? So you have like a possibility to not invest all the money that you aim for.
Yeah, you need to invest it completely into impact. That's a very important one. It's a very good question. You can an investment, an impact investment can only be called an impact investment if 100% of what you raise is being used to achieve that impact target that you have. I gave the example of if you have a device that decarbonates the room where I am in, then you can measure that. If you deploy it in 500,000 buildings, what is it going to do? Number of tons.
Yeah, so beforehand, the startup company must tell how impactful their solution is.
Absolutely, and the positive thing is if you think like that as a startup or a scale up in terms of only impact, then you're gonna attract faster investors and you're gonna attract larger amounts of capital.
Yeah, is it more easy to raise money? Do you think that way?
Well, from what I see now in the last 6 months, it's astonishing how many companies and also private investors, wealthy private investors like family offices, they're really looking at companies to invest. They are looking to invest in companies that have a measurable impact on the planet.
Yeah, yeah, and I think we should. There's a lot to be done, left to be done.
So this is why I think that it's something that PropTech startups must look at it at that. It will not work for all. About it to be very clear.
Yeah.
And it's not even mandatory that it works for all. But I think, in my opinion, at least 70% of PropTech startups and scale-ups, they can demonstrate that they have an impact. It can be social also.
Yeah. Hey, one more last question. You said that Europe was a little bit lagging behind in this impact investing. Do you see
in real estate? Huh?
Yeah, in real estate.
Yeah.
In real estate. So do you see real estate waking up now and creating also these impact funds? Yeah,
when you look at the number of funds in the real estate sector, let's say PropTech, there's almost no impact funds. No certified impact, because a lot of funds say we are an impact fund or we are having an impact, but you and I, we are also having an impact about it by speaking about PropTech. No, so not a lot, but there's quite some in the making. And
so that's the good news.
Yeah, quite some people are now also raising impact funds, which is really, really great.
Now, that's good. And you are also working on a fund. Will it be an impact fund?
Yeah, it is an impact fund. Absolutely.
It is an impact fund. There you go.
Yeah.
Yeah, cool. Okay, Dirk, thank you very much for your time today. Good luck with the awards you mentioned in the beginning.
Yeah.
I hope you had a lot of applications. I saw.
Yeah. It's we have a lot of the jury members had more work than they were thinking in the beginning.
Yes.
But on the other hand, it's very, very good to have that, overview, the best competing, and we're gonna know it by next Monday already. We will know the 50 best, and the 50 best will pitch on the 27th and the 28th of June here in Brussels.
Yes, I'm too sad I cannot be there in Brussels because I have some other things to do at that time. But I wish you a good couple of days during the awards and the nominees, and also during Relevation, because I think Relevation is also a massive and a great program that you mentioned at the end.
Yeah, it's a fundraising.
Go there, yeah. If you need money, well, be there.
Yeah, absolutely. That was what I was thinking. Yes. Great.
Okay, thank you very much.
Walter, was very nice speaking again with you and with all of presenting for all the audience. Thank you very much.
Thank you. See you soon. Bye-bye.
Bye.